Hello out there, Theo Traders. This is Doc Severson with the evening report for Tuesday, May 17th. Today was yet again another key reversal bar, as today we had a higher high. As you can see here, we had a higher high and a much lower close. Although we didn't end up with what's known as an outside bar. So an outside bar would show us that we have a lot of pressure in that direction. And you can think of an outside bar as saying, okay, we tried to go higher, but if this actually closed down in this area especially, then it would show that we have massive sale pressure down in this area. Now, what remains as a target down here is about 2030 or so on the ES. So I would not be surprised to see the price down in that area before too long just to test that area. But actually, I believe that there is a longer term target which may be hit before all of this is over. Now, something you can also see just by looking at these candles is the range of the price action has gone from being very, very sleepy over here midway through April and has started to become a little bit more volatile. And not a lot. We're not seeing massive amounts of volatility like we did back in January or even last August. Okay, but it's starting to creep in, and it does need to be watched very carefully, because this is where we get into areas where all of a sudden we wake up in the morning and the markets are down 20, 30, 40 handles or so. So what I can do to this chart to better understand what's going on here in terms of this is I'm going to add a volatility study down here, which is called the ATR, or average true range. And what this is going to show me is that we are starting to indeed creep up a little bit. So we'll see these massive areas like up here in the 40s and 50s, and even bigger than that sometimes. We can go back to 2008 and see much more volatility than that. But still, this is a fairly heavy number, seeing an average range of 45 points per day, right? So we're now starting to creep up. We bottomed out and are starting to creep up. So let's keep that in mind, because when markets rally and then start to become unstable, we'll start to see the volatility increase. And that's when we have the danger of actually seeing some, a trapdoor move like this. So keep one thing in mind. Bottoms are an event. Bottoms are an event. Usually we have very spiky behavior on bottoms. It's almost like touching your hand to a hot stove. Okay, and we see more examples over here and over here. All of this kind of hot stove behavior. But tops are a process. Tops are a process when we have it goes on and on and on. And right now what I'm seeing is that we really haven't put in enough price action to hit a top just yet. Okay, so that is the S&Ps. Let's take a look at some other charts that are over here. Let's look at the Russell 2000 futures, which had actually a horrible day today. So this is truly an outside bar where the range of today's price action is greater than all of yesterday's. So we had an equal high to yesterday, but a much lower close to that. And you can start to see how the ATR is definitely getting much, much larger on the Russell futures in a hurry here. Let's look at the NASDAQ next. And what I'm seeing on the NASDAQ is a little bit different here. What we're starting to see is the NASDAQ has essentially gone nowhere here for the last 2 weeks. Really, since the beginning of May, we've gone absolutely nowhere. And this is almost what I call railroad tracks here, because you could literally put some rails on here and have perfect railroad tracks. The price is just going up and down and just oscillating within this. Keep in mind, though, that range compression like this, range contraction, leads to range expansion. So we just need to watch this range bounded by 4,400 on the upside and about 4,275 on the downside. So if we see it break above here or break below there, then that move is likely going to stick. Here's the Dow Futures, and what I'm seeing in the Dow Futures again is just this really kind of quiet consolidation. This is more of just a very quiet flag pattern. Right now, we are starting to see the range pick up just a little bit here, again, like other charts, but again, very quiet consolidation up here. So typically, declining patterns like this, descending patterns usually break out to the upside. So we'll watch that carefully to see if this trend line, if and when it gets broken to the upside. Now we're kind of seeing the opposite thing happen with gold here. We're actually seeing the volatility contract in terms of the average range, right? So we had a lot of very heavy tape back here. Well, comparatively heavy compared to a lot of the previous price action here. But what we're seeing now is, again, just sort of this almost a triangle pattern setting up here. So really what we can watch for from this perspective is either barrier of the triangle pattern setting up where consolidations can break out in either direction, as Bolkowski has shown. You know, we can see a good example of that in action as we look at the crude oil futures. So this is the QM here. And you can see how these little volatility coils are breaking out. So when I see patterns like this is what gets me excited, because this is just another one of these range contraction deals where the spring just gets wound tighter and tighter and tighter like this until it just can't stay within this range anymore. And then that potential energy gets broken out. And normally the case like this, normally with an uptrend, when we see a case of higher highs and higher lows, probability usually favors an upside breakout from these types of range compression types of moves. So even though this chart is actually in the throes of a massive monthly downtrend, as we can see if we kind of pull this out to a larger time frame perspective, or we can even do that through the chart here. So looking at this through a monthly downtrend, we can see that this is just kind of the beginning of another lower high setting up here, similar to what we saw at the beginning of 2015 or halfway through the spring here. So at some point I'm expecting this to roll over again whenever it wants to, but I will not go long on this until we start to do a higher low on this chart. So once this chart, again, pulls down, prints a higher low, and then starts to work higher from there, then we've got some real potential for this thing to move. Until that point, though, we're going to be forever trying to catch the falling knife, and this is what I see from a lot of traders that keep trying to catch the falling knife all the way along here and should be selling into these moves eventually as the price gets up to resistance. Okay, back to the S&P. I just want to make one final point here before we take off for the day, in that I'm going to be looking for the price to kind of hold up here. Whether or not you like fib retracements or not, a lot of times these can become self-fulfilling targets, right? So we have the price is held up really nicely on the 23.6 to this point. If that falls through, then I believe we are going to see price action, which is going to come down here. And this is where it's a little bit different from the cash index versus the ES futures. If we were to look at the same chart, the 38.2 fib retracement lines up perfectly with the 2000 level on the cash index, but we're dealing with a slightly different number here based on the cost of carry that's baked into the ES contract. So I believe that if the price does fall through here, and if it does, it's probably going to fall through on the Globex session. So overnight trade through the Pacific, following the sun over to the European session, we'll get that move through here. If it's going to break through here, it probably will happen overnight, which is called a professional gap. And then we'll deal with that, but I believe it will bounce somewhere down around in this area. And this is all very, very normal price behavior for, especially through literally a record move, 301 points over the space of 2 months. We're not going to find anything close to this. For every action, there is an equal and opposite reaction. So having the price come back down here to 2,000 could set up a very, very nice slingshot if, in fact, it works out that way. Otherwise, if the price bounces from here and puts in a lower high, then look out below. And whatever happens here in the next couple of weeks, I truly believe is going to set the tone for the rest of 2016 and maybe beyond that. Because a lower high setting up over here means that we potentially retest the 1800 level down here again, which is, I think, going to surprise a lot of people, especially after we saw this. But I don't have any particular bias right now. I really don't have a dog in the hunt right now. All I'm watching for is after this low is put in, how does the price bounce from here? If it bounces weakly from here and is only able to manage a lower high setting up from here, then good night. We are going to be heading for lower prices later on this year. However, if we continue to see a very strong bounce off of these levels here, then I would not be surprised if the price blows through here on the first try above 2100 and takes out the recent 2015 highs. So this is how much is at stake right now. Okay, that is it for tonight's report. Thanks for listening, folks, and we'll see you soon.